Indicators don't work. This does. Wait. How could indicators not work? MACD, RSI, Bollinger Bands? Everyone's using them. How could they not work? Well, let me explain. I've tested all of them. Every single YouTube scalping strategy, swing strategy, and they are all a scam. Now, this will take me around 2 minutes to explain, but if you don't have 2 minutes, you might as well lose 2 years of your life trading. So, there are two types of traders. There are institutional traders and retail traders. Me and you, we are retail traders. Institutional traders operate with billions of dollars of other people's money. As you might guess, if you operate with billions, you move the markets. The only problem institutions have is that they need liquidity. What is liquidity? Liquidity refers to efficiency of ease with which an asset or security can be converted into cash without affecting its market price. In other words, liquidity describes the degree to which an asset can be quickly bought or sold in the market at a price reflecting its volume. Institutions want to get in and out of the trade quickly. So how do they do that? Well, my friend, let me introduce you to market manipulation.
You know, I'm something of a scientist myself.
What is market manipulation, you might ask? Well, I'll tell you. Manipulation is often artificially inflating a price of an asset or a stock so you can get out of it. In other words, institutions buy or sell a little bit more of what they already have to create a false signal. A false signal where? In your indicator, in your RSI, an overbought or an oversold level, so they can manipulate you into buying or selling something. That way, you give them liquidity and they exit, hit your stop loss,
interest, and it's gone.
Now, can you avoid that? The answer is yes, you can. But how? There are 3 steps that I'm going to show you so you can avoid being destroyed by the market. Step 1. Stop watching stupid 5-minute strategies on YouTube. No, seriously. I've tried them all. And you might say that I'm an idiot.
This guy tested his strategy 100 times, 500 times, and it got 86% win rate, 90, 95, 100% win rate.
Well, let me tell you how these YouTubers trick you. I want to show you how these strategies don't actually work, so let's go to the whiteboard. There are 2 stages of the market, in my opinion. Stage 1, nothing happens. Just like that, price goes up and down and up and down and up and down and up and down. Stage 2, there is a trending market. Now, in this market, price goes up and down, or maybe only down, or maybe only up, in a direction. Now, 99.9% of the strategies on YouTube are for market number 2, for a trending market. But guess what happens if you are not in a trending market? And I'm going to show you an example right here. Just open Bitcoin. Bitcoin, that was just the market we checked. This right here was a trending market. Well, what happened a little bit before? Does that look like a trend to you? Well, it doesn't look like a trend to me. And let me tell you what you do in that situation, because I've tried it. You get liquidated. And of course, there's strategies that work for market where nothing happens. For example, my strategy is just like that for market does this, that does nothing. But again, in a trending market, it doesn't work. These traders can just take this market, backtest right here. Oh yeah, we've got to win here, guys. Oh look, that's 10%. Oh look, from here to the bottom, that's 2.2%. With 5 leverage, that's 10%. Yeah, but it doesn't work because that's not a real backtest. That's just nitpicking the markets. So, I hope I showed you that 5-minute scalping strategies or any strategy on YouTube doesn't work. And also, no trader that actually has $1 million strategy would share it for a YouTube video for getting 100, 200, a couple of $1,000 from ad revenue. So let's keep going. Now, what you have to do instead And my advice number 2 is go back to the basics. Remove all indicators from your chart. Ask yourself, can you identify the trend? Do you know how reversals happen? Do you know why reversals happen? Do you know what's a fair price? Do you know what support and resistance are? Try to identify key levels, understand smart money concepts, understand why stop loss hunts happen. Also, backtest like a maniac. Remove all indicators, backtest like a maniac 6, 8, 10 hours a day, as much as possible, so you get the feel of the market and not only blindly watching an indicator. And step number 3, you can actually use indicators. And that sounds a little bit strange, but do not use indicators the conventional way. Why? Because institutional traders know how retail traders think, and they manipulate their thoughts with this stupid indicator. Let me give you an example. For example, why would you look at the RSI as an overbought and oversold level? You can, but you can also look at it as a trend, as a directional indicator. You can draw trend lines, you can find divergences. Just try to think out of the box, because institutional traders create the box that the retail traders thinks in. That's the only way to be profitable. If you want me to make a video about a certain topic that I mentioned in this video or something else, comment down below and see you in the next one. Bye.